Welcome to the Abundance Mindset Podcast, where we help mid-career professionals and business owners make efficient long-term decisions for their net worth and wealth.
Today, we're going to talk about the difference between buying a financial plan or buying a financial product. And this is really personal and really relevant. I have been in multiple consultations where people are coming to me and they're saying, we just went through this process with this advisor and we kind of got funneled into this product. We're not really sure, but they also talked about other things. So we're not really sure if we're getting financial planning, and this happens.
Yeah. This is, like Alison said, this is a really personal episode for us because we see it a lot and have lived it ourselves. Even we were proud owners of a financial product for a time in our 20s that ultimately we found just really didn't suit our goals very well, and it ended up being a loss for us financially, but a gain for us in life lessons, or at least that's how we ended up squaring that circle.
Yeah, ultimately, I think it's hard to be a consumer. I mean, I've even learned lessons, and I'm a CFP.
Yeah.
But it's hard to be a consumer or a client and navigate not only the financial industry, but then within it, what am I actually getting? What am I paying for, and what am I receiving for that? And you even Google financial planner, and you can get anything from a representative at State Farm to a full-fledged wealth management team to so many things.
Right.
It's just hard.
Yeah, financial planning and financial advisor are two terms that unfortunately in our industry have been kind of washed of their meaning, because pretty much anybody can claim that they're a financial advisor and pretty much anybody can claim that they're doing financial planning. So that's why in this episode, we're going to go a layer beneath that, because everyone you talk to is going to tell you they're going to do financial planning. Everyone you talk to is going to call themselves a financial advisor, and everyone you talk to should be a fiduciary. We've got a separate episode on that, but none of those things actually define quality. And
Yeah.
so we're gonna help you define quality, because we don't want you to end up in a situation where your financial plan isn't serving your interests, but it's instead serving the interests of a company.
There's so many questions you should ask and layers above being a fiduciary that, could be pointing to the value or the quality you're receiving. But ultimately, today we're just going to try to distinguish financial planning versus financial product sales, essentially wrapped in financial planning. But, I think it's so relevant. I mean, even this past week, we brought on a nice young couple, higher earning income couple, and they're so kind, and they just went through the financial process, we'll call it, with another company, and we won't name that company, but they didn't pay for the plan, and they went through several meetings and got asked for referrals and got all the things, but they couldn't shake the feeling that they weren't quite getting unbiased advice, and it just kind of kept driving towards a certain product. And there's usually a couple common products that a lot of big companies may or may not drive towards because reps are incentivized to. But they just got that feeling and they just weren't quite sure, and they're saying this
Mhm.
is right for you, and they're asking, is this really right for me? And then they went through our process. One of our clients was actually in Greece talking with this couple and said, hey, you know what? And this has happened multiple times, but this is just a fun story because they were in Greece. And so he sent him over our way, and yes, we charged him for a plan, but they went through our process and said, "Wow, I'm just so glad we're getting some advice."
Yeah, never doubt the power of a conversation over wine in a Greek vineyard on
Yeah.
vacation
Mm,
to really
yeah.
open up your eyes to financial
Yeah.
planning.
That one's a fun one and top of mind because it just happened last week, but it happens a lot.
Okay, so we won't go too deep into definitions in this episode, but two key ones, because we're going to talk about financial planning, financial products. Alison, would you mind just giving kind of our brief definitions of each?
Sure. So financial planning, think there's a wheel of topics. No one is weightier than the other. It could be you're thinking through tax implications, controlling your tax landscape and strategy. You're thinking through estate considerations, doing a beneficiary sweep. You're thinking through cash flow. You're thinking through investments. You're thinking through all of these topics, right? And you're trying to make everything spin cohesively and efficiently around your goals, your family goals. That's financial planning in a nutshell. And it might result in maybe one year you use a product to meet a goal, but it's kind of tertiary, right? It's kind of after the fact, and it's really well understood if you're using a product. And it's just all based on advice. So that's financial planning, right? Product sales wrapped in financial planning, it's usually going to include a product, right? Whether that's an annuity, a mutual fund, a lot of whole life or variable life or universal life. That's a common one. And I'm not saying these things are bad, but it's somehow they're in every financial plan. And everybody, it makes sense for everybody. So that's when you've got product sales just kind of wrapped in financial planning, and usually you don't pay a fee to go through that process.
Right. So financial planning, comprehensive, consultative approach, advice driven financial product, a tool in the toolbox that sometimes gets conflated as financial planning, but ultimately it's just a tool. It might fit you, it might not fit you. It's probably not the only tool, if it does fit you, that, fills out your financial plan.
Yeah, and people are always paying somewhere, right? I just prefer to charge people up front so they know they're paying for a plan, right? You're paying somewhere. If you're getting product sales, then you're probably paying with the product.
Yeah, yeah, and I mean that's even just like a really like when I say it, it feels almost too simple. But like, hear this: like, no one's doing this for free. So if it feels like they're doing it for free, like look deeper because you're paying somewhere, and you should know where you're paying. So
Mhm.
again, it doesn't mean it's wrong or it's bad, but you should know where you're paying and why. Because if it's not clear to you, know that it's not just because your advisor's doing pro bono work for you.
Yeah.
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 Which I think so. I mean, that even starts to get into the meat, right? So, like, every industry, whether it's finance or, healthcare or agriculture, like they all have like a price for value framework, right? And we've talked about that in separate episodes because I think it is an important framework of like, hey, here's the value being provided, and here's the price would need to pay for that value, and then it's up to me as the consumer to decide if that price is worth it to me. That's really simple when you're going through the grocery store. It's a little more complex when you're paying for things like healthcare or financial services to define that price versus value. And I think like the right place to start here is on business models because like we were saying at the top, talking about financial planning and financial advisors, like those terms unfortunately just don't really help you very much in determining what the value is. So the next layer down is just to talk about business models and how people in the finance industry make money. And from a top line, we're going to talk about two different types of models or institutions: the RIA model or registered investment advisor model, and the broker dealer model. So we're in the RIA model, and that one is an independent space. Revenue is primarily coming from flat financial planning fees paid out of bank accounts or credit cards, and then fees for managing assets or an assets under management fee. So, money is paid for advice given, and then money is paid on an ongoing basis for implementing and managing investments and comprehensive planning over time.
And when you're in the independent space, you have access to the full marketplace, right? You're not it's just one big toolbox versus, a lot of times big company, you've got, a list of here's the portfolios we use, here's the products we like, right? Whereas in the independent space, it's just like here's everything, for the most part, and there's a responsibility with that, but it's in this business model, it's you don't have incentives tied to products or portfolios or it aligns your incentive with client success.
Yes. Yep. You're walking into Home Depot and you could buy any tool that you want that fits the job. You aren't handed a toolbox and told, make this work for this client.
Yeah, you're not always getting the hammer. You might need a screwdriver in some situations. So
Yep. 100%. So yeah, insurance or broker dealer model. So often in these cases, revenue is driven heavily or primarily by commissions or, takes on products like financial products that we talked about, right? It's like annuities, insurance, universal insurance, whole life insurance, proprietary mutual funds. So in this case, the incentive ties more clearly toward transactions. And oftentimes in these models, financial planning is given as a free service up front. And from a business model perspective, it's a bit of a loss leader, right? Because again, if you're doing this work for free, you're going to get comp somewhere, and the compensation in this business model is from the products that somebody ends up buying and purchasing. So again, this isn't like this doesn't mean it's an inherently bad thing or it's not inherently wrong. It just is limiting, and in our experience, free financial planning means that incentives are elsewhere, and that's at minimum, a reason to pause and ask, where are the incentives and why?
Yeah, and I mean, I even have stories about this, but there's just when let's just take thinking about a big company, being a financial advisor there, a lot of companies have rules, on how advisors are going to be paid and incentives in that way, right? Where you could be a financial advisor and be told, hey, these income streams are tied, you don't control them, right? In the independent space you do. And so if you don't have as this much, insurance sales, then you can't keep as much of your investment revenue, or, that ultimately can drive towards different product sales. And so that's where it's just, how does your advisor make money? How are you being then given advice to? And yeah, and ultimately what are you getting? And I think I, posted something on LinkedIn the other day of just, if you're buying a free plan, right? It's well, what's the value? You're not buying anything, you're probably buying a product. And or maybe, man, I think I was just saying something cheeky around if your if your financial plan has to be paired with a lobster dish, then inherently that should be a clue that something's missing, right? So this is just so relevant. You've just got to be aware of, am I buying a product? Am I ending up with a big life insurance policy at the end of this, or a big, real like mutual fund heavy portfolio that they're all charging me 1.5% for the funds. It's just these are the things that make it really tricky.
Yeah, yeah, and I think, I mean, there's another level below this that maybe we'll even do a separate episode and pull some examples because it gets really technical to go into it. But like just even an example, we brought someone on earlier this year who had an advisor, and well, and many of our clients come from past advisors, but she was in a portfolio and it wasn't clear where the expenses were coming from. I was like, okay, there's not an asset fee. Okay, she doesn't have a product, but if you really look at the statement closely, you realize that every time her advisor had bought a mutual fund for her, they were taking like a 2 to 3% commission. So transaction based again, right? So it's like, hey, I invested $10,000. No, you actually, you invested about, 9,500. You had to pay $500 just to invest this money.
Yeah, you know what? That actually makes me think of this past year, three people who the fees that they were paying inside of their investment, so the advisor fee and then the fund fees, were more than the growth, which, you
That's
know,
tough.
that's hard to do. I mean, that's just next level tough.
Yeah.
And
So
so I don't mean to laugh, but this happens. And so I think the bar for financial planning is just so low, and because some people just don't know, that they're in a product sales model.
totally. Yeah, and I mean, and so our heart, right, is for people to be able to make a good value for price, distinction, and to be able to do that analysis themselves. And yeah, like we've been talking, a lot of people actually that we work with come from past advisors. So if this episode so far is speaking to you, this is something we standardly do as well. We will offer complimentary consultations for people. And yes, many people come from current advisor relationships, and yeah, and they just want to get a second opinion on what their advisor is doing and get some help making that value calculation in their mind, because it can sometimes be hard to go to your current advisor and try to figure those things out for yourself. So we do help with those things.
Yep. I can't tell you how many times I've looked at, a client who's coming from another advisor, and they're looking at their portfolio and they have no idea that they're paying 2% between the fee and, they pay their advisor and then the fund fees. They had no idea that their IRA got rolled into an annuity, and they have this huge whole life policy that they were told works like a bank account. So it just happens. It's just common. And it's something that, I think we can really raise the bar in what real financial planning is.
Yeah.
So I mentioned that this is personal for me because I started at a big company, and it was, this broker dealer setup. And sometimes even a lot of companies will say, "Oh, well, we are an RIA, or we are, it's," but ultimately at a big company as an advisor, you just have to figure out how you're going to get paid, right? And I started, and I figured out, it took me a while, surprisingly, but that I wasn't going to get paid very much on all these Roth IRAs I were setting up for people, right? Because I knew and I felt really good about setting up Roth IRAs. This is like early 20s Allison. I'm setting up these Roth IRAs for people because I know, oh, this is good. You're not going to be able to do this forever potentially. And so Roth IRAs for all. And I just knew, oh, that was a good piece of a plan. Versus, I wasn't quite sure what, these other products were, but everyone seemed to kind of be all about these products. And, I got to a point where, I'm setting up all these Roth IRAs and I'm barely making anything. And then I figured out that I had to meet certain insurance sales thresholds or product thresholds, whether that's annuities or life or certain insurance sales thresholds to be able to keep the even a significant amount of the Roth IRA investment income. So I I mean I pretty much was working for free because it's these income streams were tied, for me, and I had to sell products to be able to keep, revenue from the Roth IRAs. So I,
Yeah.
I was pretty hamstrung.
Yeah, well, and this is the kind of thing that no advisor is ever gonna tell you as
Yeah.
much as you push them, right? So but I think that's important where, if you're working with someone who's not independent, they're all gonna say they are, but if they're working for a bigger company, understand the bigger company has the power and does in many cases, like the one Allison just shared, they have the power to tie revenue streams together in a way that, in our opinion, is inappropriate, such that it pushes or incentivizes advisors toward doing one thing in order to make money on the other thing. And the other thing might be the right thing, but you shouldn't tie doing this thing on the left to making money on the right. And that's probably actually maybe the most powerful thing in the independent space is that there's no tying of revenue streams together or incentives that bounce off of each other. It's all clean and straightforward.
Yes, and the client understands it. I used to have clients ask me, "How do you make money?" I'm like, "I don't even know how to answer that." And so it's just so clear and you have the control and it's in the best interests of the
Yeah.
client.
Yeah.
So,
So okay, so you can tell this one is this one we can go off on because there's a lot of personal experience. But okay, I think these things are maybe evident from the conversation, but signs you're buying planning versus signs you're buying a product. So
mm,
let's just summarize these. So
yep.
uh, buying planning, you're paying for advice directly, hourly retainer, flat planning fee. It's the way you might hire a lawyer, right? Like you pay them for their expertise. You should pay a planner for their expertise. The plan covers multiple areas, not just insurance or just investments. You should be looking at cash flow, estate, tax planning, beneficiaries. Tax planning is huge. I mean, I think, in our opinion, if you're not getting tax planning, then you're really not getting comprehensive financial planning because that's one of the hardest things to do, but also typically the largest value lever in a financial plan. That's just our opinion there. But lastly, recommendations are brand agnostic when you're buying financial planning, right? It's
Mhm.
like, hey, this is a concept or a thing that would be really good for you. I'm not going to tell you what company or what vehicle it has to be, right? It's like, no, we're going to fit this need. And then we could choose from a variety of sources to fill the need based on circumstance, preference, price, etc.
Options. Yeah. It's like the doctor. It's like, hey, you go to the doctor, you pay to see the doctor, and the doctor says, here's different strategies we can do to heal you, right? And help you. Same thing. You come, you pay for a plan, and hey, here's the different strategies that can get you to where you want to go.
Yep. Yep. Signs you're being sold product. The planning is free. It's a yellow flag, not a red flag, because advisors that have straightforward business models will sometimes offer free planning, but again, know that you're paying elsewhere. So it's not a sign that there's bad incentives in play, but know that it's a yellow flag that you're paying somewhere else. It's just not the planning fee. Another sign you're being sold a product, the solution just kind of always drives back to something. And I think this is where it can get really confusing, right? Because there's 100 ways you can illustrate a concept, and if you're talented at driving toward a product, you can make it really compelling. But
Hmm.
be aware that if regardless of which direction you set off, if it all kind of wraps back around to a certain type of product or a certain set of recommendations, that's a sign that you're possibly looking at product sales more than financial planning. And of course, with sales, there's pitches and closing. And if you feel like your advisor's strong arming you a bit or pushing you more than you're comfortable, maybe even making you feel like you're coming out of the driver's seat, that's also something to be cautious of.
Yeah, I think a common button they might press on would be safety, right? Everyone wants safety and security, and so they'll kind of press on that emotion or press on that button, which for the most part, a lot of people want to feel secure when it comes to financial planning, right? But that can be something where, you know, is that button being pressed on, and then the solution is always the product.
Mhm.
You
Yeah.
know, it
And, it's obvious where our preference is from this conversation. I think it's fair to say, like, product-based companies, like, it's not inherently bad. Products are certainly not bad. We use products for clients. The issue is when the product becomes the plan. That's where you start to run into issues where the product stops fitting an individual circumstance well, or the product is trying to cover way too many things altogether and minimizing other really valuable areas for the client. So, products, not bad. Products can become misaligned with client incentives, especially when a company incentivizes their employees toward selling products.
well said. So the bottom line, three takeaways. If you're not paying for a financial plan, you're paying somewhere. So know where you're paying. Nobody works for free. If you don't know what you're paying, or even just where, that's something that would be a red flag. And you really need to take control as the client. And whether it's you look on your statements, you ask your advisor, or you ask another advisor to help you understand where you're paying. And and if it's not really clear, right, whether it's from your bank account or it's an assets fee, then you want to start to delve into, am I paying through a product somewhere? So I hope this gets the conversation going because I know it's relevant and I know that this happens to real people and big emotions from people who have worked with a product sales advisor for years, and then they're just making the switch to abundance
Mhm.
or the independent space in general. So this is something that we wanted to make an episode on because it happens so often and it's so tricky and hard to figure out the right questions to ask. So
Yeah. Yeah. So, two resources for you if you find yourself either considering an advisory relationship or in one right now, where this podcast maybe caused your gut to clench up a little bit. So, first off, like we mentioned before, we frequently do help and consult people who are unsure about the price and value relationship in their current advisor relationship. So, if you can visit our website, you can request a consultation. Happy to talk there. Secondly, we haven't talked about this yet in the episode, but we did create a free financial advisor interview guide. We have 5 key questions on that guide that can really help dig into the second, even third level in terms of, what kind of financial planning are you getting? What kind of financial advisor is this person, right? So if you're stuck on those two terms with somebody, these questions help you dig to the next level, and make just a better calculation of what you're getting from that financial planning, from that financial advisor. So we hope this tool is relevant for you. And yes, if you're interested in chatting with us directly, you can find out more via our website.